Well, hello again, traders, and welcome out. This is Sankit from Currencies here, and this is a market recap for Monday, November the 7th. So let's get into it. Let's talk about today's market price action in our market analysis section here. So starting with the market performance today, we actually got a nice little extension to the rally from Friday. So as we are heading into these elections, we are getting a nice little uptick in the market. So overall, if you really look at it, market has been really bouncing back and forth in the past week. So as we are again kind of wedged in between the 20 to 50-day moving average, it seems like the market's just used as a pullback and trying to rally higher. So I think at this point we expect a little bit more further price action to the upside here in the equity markets. So far, risk on environment. As we take a look at the world markets, we're seeing the very similar thing. And again, a little bit more outperformance as we take a look at the VT World Stock Index. So overall, it seems like the markets are just shrugging bad news and trying to go higher. So I think at this point, we just be better to position ourselves on a little bit more on the upside in the markets. Lastly, the crypto world, again, we've seen a nice little movement in the past week, and then we're just seeing a bit of a pullback so far. So I think overall, the market, again, remains, seems to be turning the corner here. The crypto's looking better. We have seen the equity markets start to look better. Emerging markets start to look better. So it seems like market wants to rally a little bit, but again, we'll have to kind of wait and see as far as the continuity goes. If you're looking for a further breakout, again, this is a breakout level that you're looking for, 38.90 on the S&P. I think above that would actually be a lot more bullish. So it's still in the early stage here. Market can either establish a lower high and roll, or make a higher high and then continue moving higher. So I think we don't want to be so over optimistic, because we've seen that with the markets, it continues to change. We have still a very important report this week, which is the US CPI. So that could change a lot on Thursday. Until then, I think we probably have a little bit more under cruise control. So let's take a look at the outlook here. Again, right now, we were last week at a +1, then we went all the way to the -1, and now we are back at a +1. So again, a lot of back and forth. So we are above the 20-day, below the 50, and there's just not a whole lot of trend line to follow here. So I think we are in this little section here, and we're just trying to break out one way or the other. So in the shorter term, market seems to be holding a little bit better. Showing out bad news, which is a good sign. So I think as we go into the elections tomorrow, we'll probably see markets have another bullish day. Now, looking at the schedule, this is not a busy week until Thursday. We have the CPI, the US CPI that's coming out. And again, this will be another one that could really move the markets, really move the dollar. So this is the only market moving event that we have this week. Until then, I think we just have to rely on the market overall strength and weakness. So let's do a quick currency analysis and see, okay, where things are sitting as far as the velocity goes. So let's take a look at the performance here, starting with the crypto world here. Again, the Bitcoin was actually a little weaker. Bitcoin Cash, Ethereum actually had a nice little uptick over here. So overall, price action in cryptos start to look a little bit better. As we have said it before, I think throughout this year, this is again one of those times where cryptos looks okay. We'll have to kind of see what kind of price action we get, as we have seen cryptos will do well when there's a risk on environment in the markets. So if that continues, we'll probably see more of this price action in the crypto world. Now, looking at the currency, and as you can see in currency, it was a bit of a mixed bag. I mean, Aussie and Kiwi were the best performer on Friday. They were not really performing at all. Again, nice little movement overnight. If you really want to recap, we had a lot of this speculation and optimism of China reopening, and we really saw this Aussie and Kiwi really took off on that one. Over the weekend, we got some news that they're not really moving on the zero COVID policy. So then overnight, we saw the Aussie and Kiwi were down a lot more during the day. They did recover, but that's not where the price action was. Pound was really the best one, and again, that's coming off from a very bad week last week. Last week pound was down almost 3%. So by gaining 1.11%, it's almost reversing some of its move. Outside of that, the euro is actually had a nice bounce, and surprisingly, Swiss franc actually came out of the woodworks and actually had a nice day. I mean, Swiss franc has been one of those weaker currency. We have seen a nice divergence between the euro and Swiss franc, but day like today, they both were strong. On the other side, we have the yen and the dollar continue to slump. So we'll talk a little bit more about the dollar here, because the dollar move seems to be a little more surprising to me, because as we take a look at some of the correlation, the yields continue to go higher, but then we have the dollar actually still plunging lower. So I think we have to really pay attention to the dollar. But for now, in the shorter term, the dollar, CAD, and the yen, that's where the weakness is. Outside of this, I mean, CAD is just really piggybacking on what the dollar is doing, and actually yen is really looking to be a decent short here. On the positive side, we have the Swiss franc, which has actually picked up a score today. I think in the shorter term, we have to kind of wait and see if the Swiss franc really give its move back. But right now, it's coming off from a very nice downtrend. It's actually had a nice little rally today, so we have to kind of wait and see if there's further continuation there. The pound and the euro, they actually were the best performer, and among the growth currencies, we have the Aussie and the Kiwi. Kiwi definitely I like a lot better than the Aussie, but they're kind of doing the exact same thing at this point, while the cryptos really were in the middle there. They had a move nice last week. Overall, I think they are just consolidating before it actually runs higher. So let's take a look at a possible trades and talk about look at some of the charts. So let's start with this dollar and the bond yields. So one of the things that I've talked about, and again, overall, there has been a very nice correlation between the bond yields and between the US dollar. So this is the first, now we are actually seeing a disconnect. I mean, if you look at the daily chart on the left on the dollar, I mean, dollar seems to be peaked here, had a pullback, had a rally, and then it's pulling back to its support here. On the other hand, the yields are continuing to go higher. So there is definitely a disconnect that we really haven't seen. And this is why I've talked about, just following these bond yields to use that as a guide for the dollar. But I think right now I'm seeing a little bit more confusing signs here. So you can see by overlaying the 2-year yield on the dollar basket, you can see this is a disconnect here. The yields continue to rise, and the dollar continues to pull back. And I know some traders really had a hard time kind of seeing this breakdown, because if you look at the last few months, it's really been in sync with what we are seeing. I mean, so far the trend has been very much intact, and now we are getting a little bit more of this change. So if you really go back in time, I mean, we have seen this change where they really gotten out of touch. I mean, if this was back in May, if you look at it, yields were flatlining here, but then the dollar pulled back. But then as soon as the yield picked up, the dollar just rallied. So again, in between, we have seen these moments. Sometimes they're very spot on, and there's some times where there's a disconnect. So right now, we're definitely getting a disconnect. So question is, what do I follow? Well, I think if you take a look at it, the dollar just by itself and just take the yields out, I think dollar is so far not really giving us a sign that wants to reverse. I mean, the fact that overnight it did gap up and then reverse the gains in the European session, so far the price action actually looks much weaker than on the stronger side. If you take a look at a 4-hour chart, I mean, we are back at the lows that we had over here. So I think at this point, it seems like the dollar wants to go lower. So we are right at the parabolic SAR here. As we get below that, I think we could see a little bit more dip in there. I personally, again, looking at a lot of these pairs, I actually like the yen much better as a short, especially on a breakdown of this one. So look at it. I mean, both the dollar and the yen, they both need to break that support. So I think upon breaking that support, whichever breaks it first will have a nice move. And to track that, you can actually just keep an eye on dollar yen, see which one is doing better than the other. So right now, as you can see, the dollar and the yen kind of flatlining here a little bit. If the dollar yen pulls down, then clearly the dollar is the right pair to be. But if the dollar yen continues to kind of stagnate here or maybe rise, then we can actually take a look at yen crosses. But right now, they both look interesting to me here. So the question is, okay, both the dollar yen looks weak. What do we buy? So this is where we're going to take a look at some of the other currency baskets and see what you're seeing. So the Kiwi has been rising very nicely and steadily. 4-hour chart, you can see this thing just pull back a rally, pull back in a rally. So I still like further upside or further breakout in the Kiwi. Compared to the Aussie, I think Aussie has been more restrained. But again, same thing. Keep an eye on Aussie Kiwi just to make sure you're picking the right currency. And right now, if you take a look at the Aussie Kiwi, I mean, it's just having a low base here after having a big move down from 112 down to 109. It's just basing here. So upon a break of that base, seems like the Kiwi wants to actually move compared to the Aussie. So I like Kiwi on the long side compared to the Aussie. Now let's take a look at the currency basket. So Canadian dollar, again piggybacking on the move from the dollar. On a currency basket, again, realize that this is still very much range bound. So when is this going to be ready to be traded? I think once it breaks below or get out of this range. Whenever it's in the range, you can still go back and forth. So I think this is another currency, another shoe to fall. Eventually, when it does, we'll probably get a nice movement. But so far, I think the dollar and the CAD looks very similar. On the other hand, we had a nice movement in the pound. So question is, do I buy this pound rally? I mean, if you look at it, like we had a nice little drop over here and we have almost recovered the losses here. So I think the pound seems to be better on the long side than the short side. And same thing goes with the euro. Euro had a nice little rally as well. It was in a downtrend and actually just getting out of that zone. So I do like euro and the pound. And lastly, the Swiss franc, which again has been on the top of my list as a short. You can see that it's just having a little bear rally here. But in the shorter term, we are actually now above that downward trend line. So I think at this point we probably see some consolidation here. So I think what we would like to see is Swiss franc to maybe consolidate a little bit, and we can touch base on that short again once it starts to move. But right now it seems like yen seems to be a better short. Seems like the dollar is catching towards that side here. I think the dollar would be again a bigger mover off the CPI, but we still have 2 to 3 days to get to it. So maybe we can still take advantage of that shorter term weakness. And then lastly, the Canadian dollar, which again, after last week's Friday's jobs report, there's no love for this Canadian dollar. So it's just telling us that Canadian dollar doesn't have that relative strength. So we're better off pairing Kiwi or CAD against some of the other currency pairs. So let's just start with some of the key currency pairs. So the euro dollar, we like it on the upside. On a daily chart, you can see that it's been in this downtrend, and it's slowly trying to break out of this downtrend. I mean, this is the downtrend here. We got above it before this last week's FOMC meeting, and then you can see that they pull back right into it, and then now getting back to it. This will be again signaling a buy as we get above this 107 area. So I think this is the area that would be interesting to go long. Again, these are the dollar crosses. So we'll take a look at some of the euro crosses, some of the yen crosses as well. Because again, euro yen, if you look at it, it's just sitting right at the resistance. So a further break above this 147 area seems like a decent long for the euro yen. Now, same thing we can do for pound dollar and pound yen. Pound dollar, again, getting closer towards that previous high of 115 or about 116 to be even there. I think above that could be a breakout. Same thing goes with pound yen, and pound yen, nice little pullback here, and just rallying a little bit. So outside of the dollar and the yen crosses, again, same thing you can do for both the Kiwi dollar. Is moving very nicely to the upside. So again, clearly we are seeing some turns being made in some of these currencies, which again has been in this downtrend for pretty much since August and September. Has been pretty brutal months for these currencies. So they're just having a bounce as we're getting out of this little downward trend line. I also, outside of those two, again, we can also take a look at Kiwi CAD, which is following the suit. You can see how one way it was, and now it's finding it very much one way as well. So where's the next level of resistance? I think the 82 area. So again, we're just highlighting where the relative strength weakness is. And at the end, it all comes down to the holding period and how long you're going to hold this trade for. So slow moving trades like this, they are better off on a higher time frame because they're just following that direction, but might not follow the tempo. But so far, I mean, those are the low volatility trades, and I think they continues to be performing well. So in the next 24 hours, I think the focus again will probably go back to currencies like the Aussie or the Kiwi. I mean, right now, as you can see, Kiwi has been constantly consistent rise over here. So Asian markets, that's where the Aussie and Kiwi likely to be active. In the European markets, Euro and the pound like to be more active. Again, that will be the story until tomorrow. We'll come back with another update. Remember, this could be a two-part week. As far as the market goes, we have the CPI, which is the main focus on Thursday. But until then, we can have some decent opportunities. So our holding period is limited for that time frame. So equity markets again likely to strengthen, but always keep track of the futures market. Yen right now looks the best short to me. But as always, focus on relative strength and weakness. Always compare things to what's the better, long or short. Is it the Aussie versus the Kiwi? Is it the dollar versus the yen? Is it the euro versus the pound? And always trying to find or go with the relative strength. Well, thanks for joining. Enjoy the rest of the evening. We'll see you in the next update. Cheers.